You're listening to the Weekly Wrap-Up on Sprott Money News.
Well, greetings again from Sprott Money News at SprottMoney.com. It's Thursday, July the 2nd, 2020, and this is your Weekly Wrap-Up. I'm your host, Craig Hemke. Joining us this morning is Eric Sprott. Eric, good morning.
Hey, Craig. Boy, it's been a fun ride here. I'm sure our listeners have enjoyed pretty bountiful times. And let's see if it will continue.
Bountiful would be a good way to put it. If you've been listening to these podcasts for the last few months or the last few years, I think you're getting a lot of quality information, no doubt about that. And it's been a very busy last 2 weeks at Sprott Money as well. So thank you all for choosing us for your precious metals investments. If you're listening and you're new to precious metals, maybe you're unsure as to what to invest in or you have some questions, well, we can help with that too. Please give us a call, 888-861-0775. The Sprott Money team would love to chat with you. We've got a number of precious metals products for purchase, and you can check them all out at the website, of course, SprottMoney.com. Eric, it's been a volatile week that's finally going to wrap up today on Thursday as the U.S. markets are closed tomorrow with a market holiday ahead of U.S. Independence Day. We got as high as 1808 in gold, but now we're back to about 1768 after the U.S. jobs report. But I think it's probably good to point out that that's about $90 higher than it was last month, early June, when we had a similar jobs report. So long term, we're making good progress.
We've had a good run, and there's still, in my mind, blatant efforts by the commercial shorts to drive both silver and gold down quickly. I mean, it's almost ridiculous how many times it happens. But I will say, including even yesterday, big decline. Probably I might have even gone down by $30 from its high, but it got a lot of it back by the end of the day. And that's the thing that seems to be different these times around. That I think the buying in the markets, in the ETFs, is relentless. And notwithstanding people knocking it down with derivatives, there's some serious stuff going on in the ETFs, which we'll discuss after maybe some other comments about the economy and so on. Because it is jobs day, and we had the payroll numbers. Of course, I'm not a great believer in the payrolls numbers that I see. And whatever number it is, I mean, I know it's so brutally awful out there that I can't imagine anyone's supposed to get excited no matter what they report, because we know there's 20 million people unemployed.
Right.
And God forbid if half of them don't get their jobs back. And the way things are going these days, and as I read sort of a headline that McDonald's puts on hold reopening restaurants inside. Well, okay, there's a few people that aren't going to be hired back for a while. And as you're experiencing there, these cases just keep exploding. I was shocked to see, I think the number was 56,000 yesterday. Like, it's obvious that when you don't do the social distancing, you have problems. And I don't know do we have to get all 330 million Americans affected by it at one time or another to get the herd immunity? And so far we've only got, I don't know how many cases we have in the U.S. Is it like 2.5 million, something like that? I'm not sure what the number is anymore. But we had a long way to go if we got to have everyone end up with this thing and survive it. And of course, I have mentioned before that the morbidity rate is nothing like we thought it was going to be. It's way better than we ever thought it would be.
Right. So,
I think we'll see our way through the thing, but it's no V-shaped recovery, that's for sure.
Yeah, and before we get to the some of the physical story with the ETFs, I do think it's worth pointing out in all the hype about the jobs report today and 4.7 million jobs or whatever it is. The 3 months since this all began, the U.S. lost, and now they've finally revised the April numbers to 20.8 million jobs. And even in these big surges in May and June, we've put back on 7.4, roughly a third. Yeah. So 4.7 sounds good, but we're still down, 13.5 million jobs. That's a lot that's going to have to come back.
Plus, I think there's always funny accounting when it comes to jobs. You know that. It's always been weird. And, they got these weird birth death models. And I think the important thing is just to watch, the various news releases from various companies. Are they hiring? Are they firing? And make up your mind whether whether we're going to have an economy that could come anywhere near justifying where the market levels are.
Yeah.
Which I don't tend to believe in. So we'll see how that plays out.
Let's talk physical metal, because there is sure a rush, whether it's just at the retail level, whether it is the amount of physical metal that now is being offloaded allegedly from the COMEX. Man, the CME really opened Pandora's box there by turning that into a physical delivery vehicle, because it never intended to be one. Or just all this metal that's flowing into the ETFs. I know you've got comments on all of that.
Yeah. Well, first of all, let's start with, of course, it was a big expiring month for silver. And the nominations, I think, were 16,000 contracts, which is 80 million ounces. 55 million deliveries on the first day, which was yesterday. 80 million, just so that the listeners are aware, that's probably a little more than we produce in a month in the world, mine. So that accounts for all the production for that month. Then let's go to the ETFs. And I have been watching the ETFs very, very carefully, as I watch the COMEX every day now. And the ETFs in the last 3 days have added 6 million, 7 million, and 10 million ounces in the last 3 days. Now, let's just take 10. We mine in a day in the world 2.5 million ounces. Now, how long can we keep putting 10 million ounces in the ETF when we mine 2.5? And theoretically, 80% of silver production is supposed to go to industrial uses, not investment. So here we have the COMEX loading into silver. We have the ETFs loading into silver. I actually was a buyer of some silver PSLV just to get a little more access to physical silver. One of the things that we made a decision, I own the Jarrett Canyon mine in Nevada. And I basically said, okay, let's stop putting money in the bank here. We're going to start buying precious metals with our earnings. And we're going to put half our money into silver and half our money into gold. And you know what? I would encourage other gold producers, because the margins in a gold company are getting ridiculous, okay? Like the price of gold's $1,800. If your costs are $900, you got a $900 margin. Well, how many people have 50% margins, okay? Right. So the money's pouring in. And I think the last place you want it is in a bank. I wouldn't keep my money in a bank. Why don't you buy your own product, for God's sake? You want everyone else to buy your product. Why don't you buy it? So anyway, I'm going to do it myself at the Jarrett Canyon mine, and I will try to influence some of the other investee companies that I own and see if we can get them to invest in their product. And the funny part would be is if you have $900 margins, literally you could buy half your production. So the mines could buy half their production. Imagine what that would do to the supply of gold on the market, right, and silver. That'd be crazy. Anyway, all the signs are pointing towards continuing demands for gold and silver. The thing that appeals to me a lot recently is, particularly in gold, almost every day, whatever the spot month is, the amount needed for deliveries goes up every day as the month, even though the month's expired, right? And so I get an extra 500 contracts one day and 150 the next day. And somebody's just loading up on physical here. You don't often see people come into COMEX, buy the spot month contract and ask for delivery, but that's what they're doing. So I think there might be a group that's figured out, okay, there's a serious shortage here. Let's go get it. So it's certainly manifesting itself both on the ETFs and in the COMEX.
We've seen a good week in the shares. I think the metals are actually now down a little bit on the week, which is remarkable given where they were just 2 days ago. Now all of a sudden nobody wants them again, at least the futures contracts. But that's all right. The shares are certainly picking up, even though I'm sure the GDX will probably end up being down today. It's still going to be up on the week. We're moving back now toward earnings season, Eric. And so interest is picking up again. By later July, first week of August, all these majors are going to have great earnings reports. We had one kind of general question in that regard this week. Somebody just wanted to know what your thoughts are on how metals and mining stocks might do if the general stock market begins to correct and crash again.
All right.
Could we get kind of a margin call related sell-off again? Well,
we could, but I think that people should be much more prepared now. I mean, we had a number of times the market's gone down 20% in the last 2 years, and each time, of course, the gold stocks proved to be the better thing to invest in. And of course, you know how many companies and individuals are recommending that people own gold in these tough times. And the last time that the price broke in the COMEX, the price went up in the physical market. If you want to buy coins, which you couldn't buy. So again, it was just this difference between the phony paper market and the real market. The real market, people buy gold and silver when stocks are in a serious correction. So I'm kind of hopeful that, having seen how quickly they came out of the trough in March and how much they've gone up, that we will have a way bigger audience playing the up move here if stocks start heading down.
Speaking of phony gold, Eric, how about that dude over in China with his 83 metric tons of gilded copper?
Yeah, that was absolutely incredible. And I think he had loans of like $3 billion, something like that, against his fake gold bars. Yeah, it happens. What can you say? It's not a good thing because it makes everyone a little jittery, right? Mm-hmm. You look at your bars a little more carefully these days. Anyway.
Yeah, you do. Stick with a trusted precious metals dealer like Sprott Money. Hey, you like that?
I love it.
Yeah, there
you
go.
Segue.
Thank you very well. I'm a broadcast professional, my friend. All right. Hey, let's get to some of these stocks. I've got a lengthy list for you again. And again, we thank you for writing in with all of these names. And I do go through the entire list with Eric and ask him if there's some that he can comment on or some that he knows anything about. So please understand that we do look at all these companies, and we've got some that I know Eric wants to comment on. Before I get to some of those names, I just want to make sure we clear your desktop, Eric. Anything else on your mind this week?
The only other thing I meant to mention but didn't. Well, first of all, we didn't mention that at the end of June, we had an all-time end-of-month closing high for gold. All-time. Right. Now, people would wonder about that because we all know we went to 1,900. But that month that we went to 1,900, we closed below where we closed on June 30th this year, okay? So this is a closing high. And when you have that kind of technical breakout, when you've had it before, you end up with very dramatic moves in the price of gold, in the hundreds of percents. So as we've discussed before, some of these projections of 2,700, 3,000, 4,000, those could easily come into play here with the way gold's been acting. One other thing I wanted to say, I watch what amount of money is going into the silver ETF versus the gold ETF. And for every dollar that goes into the gold ETF, recently about 66 cents is going into the silver ETF.
Wow.
But they trade 100 to 1, which is absolutely ludicrous. Because if the world decides to spend what they spend on gold in silver, or even if it's 2/3 in silver, where's the price going to go here? They're putting so much money, and that's how you get 10 million ounces a day. Because silver is an acceptable thing now. Mm-hmm. And speaking of acceptable, I think one of the great changes that's going on in the market is buying into higher sustained gold prices. A year ago, the price of gold was like $1,300. It's almost $1,800. That's $500 difference. What do you think the value of that ounce in the ground is doing when you can get an extra $500 all profit? Like, the ounces in the ground are worth more. So, for example, I was looking at a company this morning. Let's say it got about 1 million ounces. Looks like that could grow. They're kind of high grade. I'm like, gee, 1 million ounces. That guy getting Canadian dollars, $2.5 billion of gross metal value when he sold it. And because they're high grade, he might make $1.25 billion. Then I look at his market cap. What? It's trading at $30 million? You've got to be kidding me. Anyway, that's it. But the market's coming into believing in that the high prices will be sustained. And so when I was going to refer to companies, of course, the best performance has come from large, low-grade ore bodies, which is exactly what we would have expected. Because at 1,300, maybe you don't even bring the project into production, but at 1,800, man, you're making a lot of money. And so, when I mentioned the Treaty Creek properties that are owned by Tudor, American Creek, and Teuton, with this potential 30 million or whatever getting bigger because they could even drill, and they've announced they're drilling more than one property up there this year. Those things are going crazy. Same thing with Free Gold Ventures with their 6.5 million ounce resource that now people pay for that resource. 6 months ago, they were paying $1 an ounce in the ground. Well, we know that it's worth way more than that. And, people still say, well, they're only worth $50 an ounce. Hey, we put $500 on the price of gold since we used $50 an ounce in the ground. That surely to God must be a lot higher, like 100 or 150 or some part of the 500 anyway. Anyway, those are the kind of things that are going. I noticed that Chesapeake was rocking up because they got a low-grade, open pitable. I bought a new stock called Core Mining, Kore, and that's the symbol, actually. Who's got some deposits in California, one in BC. I think it's roughly 4 million low-grade ounces in California, higher grade up in BC. But I think people start to pay for stuff like that because imagine what it's worth if we continue to have gold going into the 2000s here. What should we pay for an ounce in the ground? It's got to almost be going up exponentially. So that's all good. Of course, Discovery Mines is my favorite in terms of lower grade, but not really extremely low grade, but big silver deposits. So those kind of stocks seem to just keep doing well.
You'd mentioned Discovery. Some people asking about that this week, and also Amex.
Yeah, now Amex, I did speak to management this week. It does look like they're on to something significant in Quebec and the Abitibi. They're drilling deeper. They're getting wider intersections. They're getting visible gold. They're getting high-grade gold. These deposits can go a long way down. It's a little bit like Wallbridge, as they went deeper, the thing opened up and the grade exploded. And they look like they could have something serious in their hands here. So, the stock's done very well, but I think it's got a lot in front of it here.
You mentioned, and again, back to this, that somebody had asked about some results that Discovery put out back on June the 18th. I guess, was that some good news?
Well, they had good results. I listened to a presentation that they'd made, and they're trying to focus in on finding a higher grade section of this theoretical billion-ounce deposit.
Yeah.
And, 500 million ounces of higher grade is nothing to sneeze at. So, yes, the drilling has proven up very good results. I think they think the ore body is higher grade than the former 43-101 gave it. So they're using different drilling techniques to try to improve the recovery of the ore so that they can get a better reading of the grade. And they've got lots of prospectivity on that property. So things are shaping up pretty well for them.
If they really have 500 million to 1 billion ounces, who should buy them is the prop desk of J.P. Morgan. That might come in handy for them in the months ahead.
Oh, well, let's put it this way. Maybe the prop desk for the guys other than J.P. Morgan who are short gold. I mean, theoretically, J.P. Morgan isn't short gold. They're long gold, silver. But the other guys who are short silver, that's what they should be doing. They should be buying the shares. In fact, they might make up totally for their loss because if silver doubled fine, they're going to lose 100% of their money, but if they owned a silver stock, they'll probably make 300% and 400% on their money. So there'd be a nice way for them to cover things off.
That's funny you said that. There was a question a couple of weeks ago of somebody saying, why don't companies do that? If you're really, really short, you know you're going to take it in the shorts by having, to cover and get squeezed. Why don't you buy some little small junior producers to cover your losses?
Yeah. They should.
Yeah.
And they'd make a lot of money on it.
Yeah, they would.
Because of the leverage.
Some folks wanted to ask you about Alexco.
Yeah, Alexco, they're up in the Northwest Territories, silver, lead, zinc. I'm an owner. They're trying to get into production. I think they're scheduled to be in production this year. I have not added to my position recently, waiting to see, can we get this thing in production and how are you going to mine it and how successful are you going to be? And I sort of standing back just waiting to see how those things evolve. But I own it. I haven't sold any, and very hopeful.
Hey, let's just kind of end on an up note in general. Are you sensing yet that some of these guys and their hedge funds that have made a lot of money over the last 7 or 8 years, just naked shorting it, anything that goes up 50%, they go in and just pound it backwards, naked shorting. Are you sensing any reluctance yet? Are you seeing anything out there that just kind of catches your eye that, maybe these guys are figuring out that's not such a good idea anymore?
Well, I'm sort of snickering here. I hope they are shorting, quite frankly, because, man, they're going to learn a lesson here, okay? When you have a bull market in precious metals, stand back, baby. The last bull market from 2000 to 2011, the stocks went up 1,700%. You want to be short and lose 1,700% on your money? Be my gall darn guest, okay? And if you want to be short a bunch of stuff in the Treaty Creek area, you go right ahead and be short all you want. Or you want to short Free Gold Ventures, you just go right ahead because you're just going to get blown out. You're not going to play that stupid game with us because things have changed.
Yeah.
These things are being accumulated rapidly. So those guys, I think that game, if I was a short seller, I'd say anything to do with precious metals, never touch it on the short side.
There's got to be other opportunities in the general market, you would think, and get out of this sector, that's for sure.
Yeah, it doesn't work like it did in the old days. It was fine when you're in that bear market from 2011 to 2016 and even 17 and 18, really, before the general gold stock started going. So, but it's not going to work anymore. That's over.
Well, I hope you had a nice Canada Day, my friend.
We did. We did have a nice Canada Day, and I hope you have a nice Independence Day down there, a nice long weekend for you. We haven't figured out up here that, we shouldn't always celebrate it in the day that it is because sometimes it's in the middle of the week and it's hard to break away. So
throws off everything. Yeah, exactly.
Yeah, but our market's open on Friday, by the way. So while you're out there doing whatever you're doing, sitting in the sun or playing golf, we'll be back at the casino.
You'll be working.
See how it goes.
Okay.
We'll be back at the casino.
See what you can do. All right. See if you can get things moving back higher before next week. And then we'll be back on schedule next week. It'll be another busy week, I'm sure. As we move, again, closer to earnings season again for all the majors, we'll be back next Friday with another weekly wrap-up. In between now and then, of course, all this talk about physical metal. And if price does fall, where are they going to find physical metal again? Like what happened back in March. So get your physical metal while you can. Sprott Money has some. A lot of Royal Canadian Mint, Maple Leafs, both gold and silver. You can check us out at sprottmoney.com or, of course, again, just give us a call, 888-861-0775. Eric, thank you again for all your time and all that you do, and let's just see where we go from here.
Well, we got a good rally coming back here. We're only down $2 in the spot price of gold, so hopefully we'll end up with a really fancy day. And welcome the shorts. We'll do it to them again.
Let's do it.
You have a great weekend.
Thank you, my friend. You do the same. And from all of us at Sprott Money News at SprottMoney.com, thank you for listening, and we'll talk to you again next Friday.